Hello Sector Watchers, welcome to the show. This is the 88th episode of Sector Spotlight for Tuesday the 13th of July, recording it on Monday the 12th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. This week is actually a pretty busy week for me, video-wise or StockCharts television-wise. You're watching Sector Spotlight right now. But already yesterday, my participation in charting the second half went online. And that's actually a pretty in-depth view on the current rotation of sectors and my view on how these rotations may progress going into the second half. And I actually think that that is an interesting part. So I'm actually what I want to say actually is that I'm not going to spend a lot of time on sectors and sector rotation in this episode of Sector Spotlight, because you have a full 30 minutes of analyzing each and every sector from 3 different angles, and that's charting the second half episode. So if you're interested in a little bit longer term view, I invite you to please check out more rotations in 2021, which is part of this week's team charting the second half here on StockCharts TV. I'll actually post a link to that program in the comments below. I also will be doing a episode of Your Daily 5 later this week, where I will try to dive into a few a few stock picks, try to find a few interesting stocks based on current sector rotation, going more granular, in depth into the sectors and see if there are some interesting stock picks to make. Now, I'm going to skip the asset class rotation. In general, my view that I've presented to you over the last few weeks did not materially change. I still think we're at elevated levels. I do see the breakout in the S&P and a few major sectors and a few major stocks. Nevertheless, I do feel, and there's a lot of arguments that I've presented to you over the past few weeks, especially in terms of breadth, participation, divergences that I see left and right, that are still there, more or less, which still makes me cautious. And as I explained in one of the other programs, after a rally, a correction does not necessarily have to be a steep drop in price. It can also be a sideways meandering where the market digests the rally and all the buying that has been taking place to push the market higher. So does it mean I expect a super fast crash type decline in the market? No, not really. But I do think we need a correction, and that correction may come in price, in time, or a combination of both. Now, where are we in terms of rotation last week? Let's do a very quick look at the RRG for sectors. On this daily RRG, we see the long tail on energy pointing further into the lagging quadrant, and that's driving the weekly tail left, while it is still way up on the RS ratio scale, inside weakening, but going through a correction. And the same thing goes for financials, which on the weekly is still inside weakening, and you see on the daily the tail just rolling over, hooking inside, improving. So energy and financials probably a little bit more weakness ahead. Most interesting rotations, especially on the weekly, for technology, healthcare, and to a lesser degree discretionary, which started to come back up. The tails are inside the leading quadrant, but they've got relatively short tails and they are not at a strong heading. So the question is whether this was a little hiccup and the rotations continue lower, or this is the start of a more meaningful rally. But please check out that More Rotations in 21 program for a longer term outlook. And I want to spend the rest of this program actually answering a number of questions in the mailbag. because that was long overdue. And if you have any questions, please don't hesitate to send them. Sooner or later, you will get an answer either by email or here in Sector Spotlight in the mailbag segment. This question in the mailbag comes from Werner, probably German, I guess. Hi Julius, been using RRG for a while, kind of struggled interpreting parts of it. But take a look at the attached, which doesn't make sense at all to me and concerns me. Maybe I'm reading it wrong, though I can't see how. See attached below and focus on ATMOS. And I can see what the confusion or the concern is. If you look at the tail, by the way, it's a daily RRG versus SPX, and I think it's some sort of a chart list that Werner is maintaining. But let's focus on ATMOS. It's way up in the leading quadrant, primarily rising, just rolled over. This is positioned on July 1st. And in the table it shows a percentage change of 19.2%, down 19.2% over the last 5 trading days, which is quite strong. And still, the tail is inside the leading quadrant. I got quite a bit of those requests, and they're all sort of in the same bucket. In this case, ATMOS is inside leading, but it shows a negative performance, quite strong negative performance. Sometimes something is in lagging and it shows a positive performance, and that confuses people. Let me try to explain that probably again. I think I've answered questions like this in the past, but it won't hurt to do it again, because the repetition brings it to life, even if you have heard it before. This one may just be coming from another angle or another way to look at things. So here I have isolated the tail of ATMOS on July 1st, 5 trading days, and you see the minus 19.2. And here that wasn't visible in Werner's email. The S&P, which was the benchmark that he was using, was up 1.3 over that same period. And here is the daily chart that is now running to today. So why is it inside the leading quadrant? The thing is, the RRG doesn't show you price performance. It shows you relative performance, and even more so, it shows you trends in relative performance. And as you know, trends are never a straight line. Trends go up and down. So it is very well possible for a stock to be inside the leading quadrant and show a negative price performance. First of all, because it's unrelated to what the tail is showing you, which is showing you the trend in relative performance. So let's look at the chart on the right and see where on July 1st, that's right here, where my crosshair is, that was on July 1st, right before that little sideways move. And if you look at this move here, which is the relative strength of ATMOS versus SPY, S&P 500, I think that counts as an uptrend. And as a matter of fact, that uptrend was picked up by the RRG lines back in May. 4-5 May is when the RS ratio line crossed above 100. The RS momentum line was already trading above 100, and that pushed it into the leading quadrant. And there were 2 small periods here where it rotated leading, weakening, back into leading. And it did that again right here, mid-June. RS momentum dips below 100 and then comes back above it. That's again leading, weakening, back into leading. And now we dipped below, and this is July 1st. So at July 1st we were still inside the leading quadrant, which you can actually see on the RRG on the left hand side. And since then we now have the benefit of hindsight. The tail has moved into the weakening quadrant. The RS ratio is still above. If I move the tail forward here, then you can see that ATMOS is still inside the weakening quadrant, but now rapidly heading towards lagging. Now, let's go back to July 1st, because the most important thing to understand is that this is only a 5-day period. If you would lengthen the tail, because the percentage change here is the percentage change, price percentage change over the number of days on the tail. So if I change this to, let's say, 10 days, then you see that ATMOS is up 19.6 versus the S&P of 3.7. And if I would have presented you the chart like this, or if Werner would have opened up the chart like this, I think there would have been a lot less confusion. And if you move this to, I don't know, let's do 15 trading days, that's about 3 weeks, that's 57 versus 1.9. And let's go all the way to the right, the maximum that we can do, that's 30 trading days. You see exactly that, those two dips below, you know, the first one here, that's this little dip. And the second one, which is a little bit bigger, right here, that is the dip that you see right here, where RS momentum is dipping below 100. And here you see that ATMOS is up 98%, while the S&P is up 5%. So the algorithm picks up a little bit longer term trends. I've given as a rule of thumb that on weekly RRGs I use like a 3-month period, and if you do dailies then I use like a 3-week period. So we're looking at trends that last at least 3 weeks. So a 5-day period on the tail is relatively short, and I can see why that can cause some confusion. The best way to solve this confusion, or if you run into something like that, is to first of all bring in the price chart with the relative strength in the RRG lines, and second of all see what happens when you lengthen the tail here a little bit, and then on the daily you say, I would say go to 15 days and see how that is trending, and then you can see you're here on July 1st. If you know, you would not have known what was behind July 1st, I think we'll all agree that this was still an uptrend at the time. Maybe not anymore now, although, you know, technically the RS ratio is still above 100, so we're still in that relative uptrend according to the RRG lines, but we're rapidly losing relative momentum. So we have to see how this works out, and if that rotation of the tail is now rapidly moving towards lagging and going in there, and basically what that would mean is that this uptrend here in relative strength would be reversed and we would start again inside the lagging quadrant. But main takeaway pointer for the answer here is, first of all, RRG showed trends in relative strength. That's not the same as a trend in price. And second of all, especially with these very low priced, I think quite thinly traded stocks, those things can be confusing. So take a little bit longer term perspective, look at the movement in the raw relative strength line. I call this the raw relative strength line. Combine it, what you see in the RRG lines, and check that with your price chart. By the way, what I noticed is if you look on a weekly chart, this is actually, it was not really on my radar, but after Werner's mail, I'm really looking at it, because look at this. It was a super long-term base that we're breaking out here. And we are now, what's happening now is that we are correcting back to the breakout level. And so we're at pretty crucial levels here, around 5. And you can see this week, which is today, we bounced off that level and we rallied. So as a matter of fact, this actually could be a pretty low risk buying opportunity. You put your stop somewhere below 5, below these former highs. That was a serious resistance level. Now should act as support. You had a correction in relative strength. We're still there on the weekly. It doesn't look too bad at all if you bring it on the weekly RRG. We're rolling over inside leading, but at 150, that's extremely high. And so you could be in for a move leading, weakening, leading. Anyway, interesting stock to keep an eye on. I hope this shines some light, not only for Werner, but for more people who get confused when the numbers in the table do not immediately match what they think they're seeing on the RRG chart. This question is actually two questions along the same lines, and there are probably more in my mailbox that come down to the same subject, so I picked those two. If you submitted a question along the same lines, please accept this as the answer. If I still find you, I usually send you an email saying, hey, you may want to check out this episode of Sector Spotlight because I think I'm answering your question. Anyway, the first part, or the first of these two, comes from John. He says the RRG newbie. Now, well, believe me, John, RRG is a little over 10 years old now, 10 and a half years since it was first published on Bloomberg. And sometimes I find myself being a newbie because there are still things to discover, still new things, still new insights. So you're not alone. You're not alone, man. He writes, Julius, is there some guidance on when to sell out of a sector? I have watched my sector's investments grow nicely and then watched the gains diminish as the sector turns over. I tend to wait and see a little longer than is wise apparently. What would be some hard and fast sell rules that you would apply when using RRG? John, the RRG newbie. The second question comes from Lou. He writes, hey Julius, thanks very much for all the work you do with RRGs. However, I am still struggling with how to use it to buy and sell different S&P sectors. I think it's clear we should be invested in sectors that are in the leading sector, in the leading quadrant, and moving in the northeast or east directions. But other than that, I don't have clear direction on how to use RRGs. Several issues come to mind. What if the sector is in the leading quadrant, but moving south, meaning it's losing momentum? Is that still a buy? A hold? Question mark. What if the sector is moving east or northeast and is in the improving quadrant? Is that a buy or wait until it crosses into leading? Does the sector ever turn from improving to lagging without going to leading? I don't remember seeing that. Should we be using weekly RRG or weekly in combination with daily? Should we use RRGs in combination with regular charts for buys and sells? What are the guidelines? Perhaps you could write a set of guidelines or make a video that helps explain. Thanks for all you do, Julius. I'm a faithful follower and still learning. Well, like I said for John, that goes for you too, Louis. I'm also still learning. And the videos and the writing, well, the video you're watching one of them. So new material, explanations, whenever they make sense, come up in Sector Spotlight. And the blogs, obviously, that's where I write it for reading. And from time to time, we update the chart school section on RRG when new things come to light. Anyway, let's go to the question. I'm gonna summarize it as interpretation of RRG and when to sell after you bought. And then Lou has a few very specific pointers that he is referring to. I have loaded the members of the technology sector with a price chart next to it. This is completely random. Well, maybe not so random because it's an interesting sector. So we have a few examples of what I would consider buying opportunities or things to buy, what to sell, or where to look for. Now, let's take Lou's question for pointers. He says, what if the sector is in the leading quadrant but moving south, meaning it's losing momentum? Is that still a buy or a hold? So in the technology sector, that would mean a sector like probably MSI, that one here, or VRSN. So MSI or VRSN, they're in the leading quadrant, but they're moving south. So VRSN is probably the best example. MSI just started rolling over. VRSN, very sign, inside leading, rolling over. First of all, you always bring in the price chart. So that's what I'm doing here. That's why I always put them side by side. RRG is my sort of warning, signal, etc. And then I bring in the price chart to actually do the final verdict. And what I see here is actually quite interesting, because VeriSign just broke out of a long-term base. It's like a 2-year range, and we broke out. And we're coming out of this very long-term downtrend in relative strength, and we had a first hiccup, now moves back, and that's what you see here. A problem is that it didn't make it very far into the leading quadrant, but nevertheless, this is a very interesting turnaround. So this is not a sell for me. It's probably a hold. Is it a buy? I think you may get better opportunities. That's the way I read this. It's rolling over, so from a relative perspective, you may get a little better opportunity in the next few weeks. If you look in price, you're actually very close to an interesting level, because let's round it off here at 220. So anywhere between 220 and 225, that seems to be a good entry point, because you broke out and now you're retracing back to the breakout level, together with a retracement or corrective move in relative strength, which can very well either bring VeriSign just back into leading, or make it rotate leading, weakening, back to leading. So that's one of the examples that I would take it. So if this happens, it's probably not a buy, it's most likely a hold. And it's very unlikely to be a sell, because the relative uptrend is still there. If we go to the second part of the question, what if the sector is moving east or northeast and is in the improving quadrant? Is that a buy, or wait until it crosses into leading? Does the sector ever turn from improving to lagging without going to leading? I don't remember seeing that. Okay, so we're looking for east-northeast inside the improving quadrant. Well, there's plenty of those. Look at that whole cluster here. PayC, Qualcomm, NOW, XLNX, AMD, Snapchat, is that Snapchat? SNPS? Synopsys, sorry. Even Apple goes into that bucket. So are these buys? Depends. I think that the closer you get to the leading quadrant, the closer you get to crossing over into leading, the more likely it is a buy. But again, bring in your price chart and see what happens. So SNPS is very close to crossing over. And that looks actually pretty nice. It looks as if we're reviving that uptrend in price. And we have good support in relative strength and about to push higher. We do need to go above that relative strength barrier here, but all in all, that looks pretty good. Why not look at Apple? It's a very short tail. That means that there is not a lot of power behind the move in Apple, and that's, for the whole technology sector, sort of a problem. There is no real power behind it, and you can see here that Apple is really struggling with that 145, I think it is, 144.60, let's say 145 area is showing up as resistance. If we can definitely break higher beyond that and pick up real momentum and pick up real relative momentum, because look at that RS momentum line, that's about flat. Then Apple can be the, drag this technology sector seriously higher. Let's do one or two more. So AMD, that is a good long tail. So I'm expecting a nice chart here. Now what you see is we're rounding, coming out of that relative downtrend here, starting to pick up. That's reflected by the RRG lines. We sort of took out this resistance here, pushing against resistance in the 95, maybe 95 to 100 area. If that breaks higher, AMD definitely an interesting call. One part of his remarks or question was that he didn't remember seeing rotations from improving to lagging and then back to improving. The question I answered prior with ATMOS was on the opposite side. It was leading, weakening, back to leading. That happens all the time on the left-hand side of the chart as well. And that means actually that you're looking at a strong relative downtrend that is going through a bit of a recovery and then goes back, continues its relative downtrend. That's what you see when you see improving, lagging, improving, lagging. So PayC could actually be one of those, because PayC is lowest on the RS ratio scale, and you see that it is now picking up. So let's see what that means. So here you see that this is in a relative downtrend since late last year, and we're at support, but this chart doesn't look fantastic. You see it's very low. It's the lowest level of RS ratio since, I don't know, 5 years, maybe even more. If you would draw a support line here, you broke that and you're testing it as resistance. So there's a lot of arguments against Paycom. And so I would not buy this. I would more be on the edge of watching Paycom to roll over in improving and go back to lagging and maybe look at something like a short position. So that was that part. And then I'm going to take the number 3 and 4. Should we be using weekly RRG or weekly in combination with daily? Should we use RRGs in combination with regular charts for buys and sells? What are the guidelines? Yes, I think you should use weeklies in combinations with dailies because it's good practice. You probably, when you do your price analysis, also combine different time frames. So you take your weekly for your longer term pictures and then you zoom in on the daily for maybe entries and exit, or you look at the daily if you're shorter term orientated and you look at hourly or shorter for your entries and exit. At the moment we only have weekly and daily RRGs here on StockCharts. So yes, because of good practice, I would say you need to always keep an eye on the higher time frame. So, you know, combine weekly and daily RRGs and see if they're in sync, see if they're contradicting, try to find information from both charts. And finally, should we use RRGs in combination with regular charts for buys and sells? What are the guidelines? There are no guidelines. It's a yes, 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 yes. Please use RRGs in combination with regular charts, because RRG is a visualization tool. It helps you to get a handle on a whole universe. It helps you to visualize the interaction between all members of a universe from a relative perspective, but there is nothing more important than price. So yes, please, whatever you see on an RRG, please check the price chart and whether it fits your narrative, whether it fits your analysis, whether it fits your scenario. Yes, please use RRG in combination with regular charts. Anyway, I think that was enough for this part, and I'm sure we're going to come back to any of those along the same lines in the future. And that doesn't matter. It's not. There's no problem. I love talking about it and love explaining it. But that's it for now for this mailbag segment. And that, ladies and gentlemen, concludes Sector Spotlight for today, for this week. I hope you enjoyed the show. If you have any questions that you want to ask me, any comments that you want to make, please use any of the handles on your screen. I love the interaction, and if not in Sector Spotlight, you will very likely get a personal email from me responding to your question. Anyway, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, and I sure hope to see you back next week at a new episode of Sector Spotlight.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.